Welcome to a special bulletin on CPI numbers. The numbers have just been released and it has come in at 2.82% versus the estimate of 2.99%. Remember, this is much below the target of 4% which is mandated for MPC. To discuss these numbers in detail, I have a host of a panel. Aditi Nair is joining us along with Indranil Pan and Sovodeep Rakshit. Welcome to this special bulletin. First question to you, Aditi. Is the number surprising for you?
Thank you. Well, the number is a little bit lower than what we were expecting. Our forecast was 3% and this has come in a little lower because of the food prices having fallen sharper than what we were penciling in. And I think in terms of the miscellaneous number, it's actually slightly higher than what we had projected. So it's a mix in terms of the underlying fundamentals. But yes, overall, the number has come in softer than expected.
So softer than expectation, the numbers have come in. Let me read out a few details as well. As Aditi was mentioning, food inflation is at 0.99%. Similarly, rural inflation at 2.59%. Urban inflation is at 3.07%, followed by core inflation, which continues to be over 4%, 4.2% this time. And what is your take on core inflation per se, Sovodeep? This continues to be little above the target?
Well, the core inflation doesn't have a target, but yes, if you're looking at it around the 4% mark, it's certainly on the higher side. And a lot of it is coming from the gold and silver and the jewelry portion of it. If you strip that out, core inflation will be closer to, slightly below the 4% mark. So I think in balance, core inflation is on the higher side than if you compare it with the food inflation part. And I think there is also a base effect to it. My sense is that core inflation will continue to move up over the next few months. While headline inflation continues to be around sub 4%. So I think that's where we are in terms of the core versus the headline or the food inflation part.
Indranil, I want to come to you for food inflation, which is 0.99% now. Do you think any of the risk to food inflations are currently not there?
Well, it's a very difficult thing to say. If you really read the RBI commentary also, they are watching out for weather-related uncertainties. For the food inflation also, there is a base effect which is dragging it down. Because the last year during the same period we had seen tomato shocks, etc., etc. Now, what I also read in the newsprint is that because of the early monsoon arrivals, some amount of tomato crops in the southern region may have been spoiled, and for that to take effect and sort of get into the market pricing, it may be around 2 to 3 weeks. So we'll have to watch out for that. As we sit and talk, there is almost a 39% deficiency in terms of monsoon. The point being made is that with the monsoon sort of estimate at normal and 104% of the long period average, if we have to make this up, you still have a chance of temporal and spatial distributions, maybe not according to liking, which can impact the food inflation. But overall said, the risks to or the significant upsides that we have seen in the food inflation in some of the months of the previous year when food inflation had actually crossed the double-digit mark. So that typical risk is not there. From that, we have sort of come down quite significantly. And with buffer storage amounts being larger than the mandated amount, the risks for food inflation suddenly bursting on the higher side may actually be lower. Even Pulse's output has been relatively better compared to previous years.
Aditi, now the number is at 2.82%. The projections of Reserve Bank of India is 3.7%. How do you think Reserve Bank of India will navigate? They have already said that everything is front loaded. Do you think this number or months to come will change anything?
I think there'll be a lot of information between now and the next meeting of the MPC. One more CPI inflation print, of course, but many other bits of information, how the monsoon is progressing, what's happening with vegetable prices. And even on the growth front, we will get to know at least some incremental information about how Q1 has progressed, what's happening with the global tariff situation, etc. So my sense is that, if you look at the average for the CPI inflation for FY 26 as a whole, our forecast is actually coming to 3.5%. So it's lower than what the MPC has penciled in. Having said that, because they have already done a front-loaded rate cut and the stance has already been changed back to neutral, as of today, my sense is that August is likely to be a pause. Once we have incremental information not only on the CPI and the monsoon, but also on the GDP growth number for Q1, there is a higher likelihood that there will be rate action in the October policy than in the August policy.
All right, that's a view coming in from Aditi Nair. But Indril, I want to understand from you, the focus for Reserve Bank of India has been growth now. Now with these inflation numbers coming in at 2.82%, do you think that focus will continue?
Well, I think they have looked at the inflation. If you really look at the differentiation that they are making between H2 and H1 and H2 in terms of inflation, what possibly has played in the minds of the RBI because and therefore the front loading is that H2 inflation is actually averaging at 4.2% compared to an H1 inflation of 3.2%, and therefore that's the view that they have taken. On the other side, they are focusing on growth, but more important than growth, I think they are also focusing very critically on the transmission. And that could be another reason why the front loading has happened, because we all know that there is a significant lag of 6 to 9 months before the repo rate action filters into the credit side reflection of interest rates. So therefore the focus is more on the transmission, which is in effect likely to provide a buffer for any downwards erosion in the growth. But I would sort of beg to differ to imagine that a 50 basis points rate cut and a cumulative 100 basis points rate cut can lead to an aspirational growth of 8% in the economy as the Reserve Bank's policy had stated. So I think there is a bit of a disjoint over there. It is more the structure of the economy that is preventing an 8% growth rather than monetary policy, which is more to address the cyclical and pro-cyclical issues in terms of the business cycle of the economy.
Thank you so much everyone for joining at this hour on this special discussion. Now inflation has come in at 2.82% and food inflation even less than 1%. But moving on, the Pride Hotel Nagpur effortlessly blends luxury, convenience and contemporary elegance, offering a premium stay experience at a prime location in the city. With seamless services and signature hospitality, this landmark property from the renowned Pride Group of hotels is a preferred destination for business and leisure travelers. Here's a closer look at what makes the Pride Hotel